Some real shakeups going on in the stock markets, both here in the U.S. and over in Asia.
It's from the Associated Press. They're on newindianexpress.com and appnews.com too, and they're showing some pretty serious drops actually. And then we've also got this analysis from MSNBC. It's a YouTube segment, and they're really connecting this whole sell-off thing to like rising fears of a recession. It's getting kind of heavy.
Yeah, definitely some serious stuff brewing. So in this deep dive, we're going to try to unpack it all,
Yeah.
dealing with here.
Well, over in Asia, it was pretty much a universal downward trend. So Japan, South Korea's Kospi down 1.5%. And then over in China, Hong Kong's Hang Seng, that was down by 0.9. And the Shanghai Composite, that one saw a decrease of 0.4%. So it's like when you see that kind of synchronized movement across all those different markets, that's definitely like a global signal, a signal of like
The Dow Jones Industrial Average, that one fell by 2.1%. That's at 890 points, if you're counting the points. And then the Nasdaq Composite, oh boy, that one really took a tumble, like a 4% loss. And it's interesting, AP, they pointed out that the S&P 500's intraday low was even worse than that. So it was actually shaping up to be maybe the worst day it's had since, I think it was 2022, when inflation was the big scary monster everyone's worried about. So, I mean, what does that kind of volatility tell us? What's the message there?
I think what's really like jumping out here is the sheer uncertainty of it all. Like the S&P 500, that thing has swung by more than 1%, like 7 times in just the last 8 trading days. I mean, that's got to be unsettling, right? Especially if you've got like investments tied up in these indexes. It's a pretty clear sign that the market is like super reactive right now, super sensitive to like every little piece of news, every policy shift, especially all this stuff around tariffs.
Yeah, no doubt about it. And it seems like those tariffs are really at the heart of it all, right? Like the underlying fear seems to be like how much economic disruption is the Trump administration really willing to put up with to get what they want, to achieve their goals with these tariffs and all the other policies that kind of come along with it. I mean, we know that bringing manufacturing jobs back to the U.S., that's a big one for them, right?
Yeah. And if you kind of zoom out and look at the bigger picture, you've also got things like, remember Treasury Secretary Scott Bessent? He talked about this idea of a possible economic detox. So, I mean, from your perspective, that's got to sound like they're kind of bracing for some pain, right? Like some short-term economic discomfort, but they think it's going to be worth it in the long run. And then on top of that, you've got all these White House initiatives, right? Things like trying to put a lid on federal spending, shrinking the federal workforce, and ramping up deportations. So we're talking about a whole set of policies here that could really reshape the economic landscape, potentially in some pretty drastic ways.
Yeah, and I mean, to be fair, when President Trump was asked directly about the whole recession thing on Fox News, he talked about this being like a period of transition. He was really emphasizing the focus on like bringing wealth back to America. But he also kind of acknowledged that it takes a little time. So it sounds like, at least from their perspective, they're kind of expecting some bumps in the road, some economic adjustments along the way.
Right. And that brings us to like the really big question. What's the data telling us? Like what are the current economic indicators saying? And the reports we're seeing, they're definitely pointing to a lot of pessimism. People are feeling pretty down about the economic outlook. And this is maybe even more significant. The Atlanta Federal Reserve, their real-time data, that's actually suggesting that the U.S. economy might already be shrinking. So that's something to watch closely, right? Like for the average person, those are signals that could mean some tough times ahead.
Yeah, and it's not just one little data point either, right? Like it seems like economists all over the place are starting to lower their growth forecasts. For example, Goldman Sachs. They just lowered their U.S. growth estimate for the end of 2025 from 2.2% down to 1.7%. And they're specifically blaming the tariffs for that. And get this, they're even saying there's like a 1 in 5 chance of a full-blown recession within the next year.
Yeah.
So, I mean, looking at the specifics, like what sectors are getting hit the hardest by all this? Where are the pressure points?
Well, one of the most striking things is what's happening in tech. Like big tech, AI-related stocks, those have been the real drivers of growth for a while now, but they're facing some serious headwinds right now. Like Nvidia, for example, they're a major player in the AI world, and they just saw another drop of 5.1%. So that brings their year-to-date losses to like over 20%. I mean, that's a pretty huge turnaround from the kind of explosive growth they were seeing just a little while ago.
Yeah, absolutely. And it's not just the chip makers either. Like Tesla, their stock took a major hit too, dropped by 15.4% recently. and it's down a whopping 45% for 2025 so far. It's interesting, the reports actually mentioned that there was a little bump right after the election, maybe because of that whole Elon Musk, President Trump connection. But that's definitely faded now, maybe because of the brand issues Tesla's been having and all the protests and stuff. So we're also seeing companies that are really dependent on consumer spending. They're getting hit pretty hard too, right?
Yeah. Oh, yeah, for sure. Like cruise lines, think Carnival, for example, and airlines like United. Their stock prices, they've definitely taken a noticeable dip. And I think that really reflects this growing worry that, with all the tariffs and the economic uncertainty, people are going to start tightening their belts, cutting back on things like vacations and travel. And even the cryptocurrency market, like Bitcoin, it's down significantly. So even that's showing like some real sensitivity to all these broader economic anxieties.
It's like everyone's getting a little skittish, right? Like investors are looking for somewhere safe to park their money and all this mess. And looks like a lot of them are turning to U.S. Treasury bonds, which of course is driving their prices up and their yields down. So the 10-year Treasury yield, that's fallen from like almost 4.80% in January down to 4.22% recently. So what does that tell us? What's the takeaway from that kind of investor behavior?
I mean, that's the classic flight to safety move, right? When investors get nervous, they look for lower risk assets and lower treasury yields. That can have all sorts of ripple effects, It can impact mortgage rates, corporate borrowing costs. All that stuff can potentially slow down economic activity even more. So it's definitely a sign that people are worried, that they're not feeling too optimistic about the economic outlook.
Okay, so let's switch gears for a second, talk about how the White House is responding to all this. So their spokesman, Kush Desai, he's been highlighting, all these trillions in investment commitments and thousands of jobs that have supposedly come about because of President Trump's America First agenda. And, President Trump also had that closed-door meeting with a bunch of tech CEOs. So it seems like they're at least trying to address some of the concerns coming from that really important sector,
Yeah. Definitely seems like they're trying to do some damage control. And if we take a look at the global picture, it looks like European markets, they pretty much followed the same downward trend that we saw in Asia. And then China, they reported their first drop in consumer prices in over a year, which is a pretty big deal, right? That's a clear sign that the world's second largest economy might be running into some trouble. I mean, the Hang Seng and the Shanghai indexes, both of those went down.
Okay, so let's dig into this MSNBC analysis for a minute, because they're pointing out something pretty important, I think, and that's like the incoherence of the messaging coming out of the White House, especially when it comes to these recession predictions. Like you got the president saying one thing and then the Commerce Secretary saying something totally different. So, I mean, how does that affect businesses, the average person trying to run a business?
Well, I think that lack of a clear, unified message, it's got to be a nightmare for business, right? Like, how are you supposed to plan for the future when you're getting all these mixed signals? And then you've got the whole on again, off again thing with the tariffs and the exemptions. It just adds another layer of complexity, another layer of uncertainty, makes it really hard to make those big decisions about investments and long-term strategy. And it's also pretty interesting because this whole thing really clashes with how President Trump used to talk about the stock market, Like he used to hold it up as this measure of his administration's success. And the MSNBC report, they actually pointed out that if you'd invested like $100 in the Nasdaq on the day he took office, you'd actually be down money now.
Yeah. Yeah, it's definitely a different tune now. And the MSNBC analysis, they also talk about how the administration seems to be like blending economic policy with all sorts of other issues, like using tariffs on Canada and Mexico to try to address things like fentanyl trafficking and border security. So it's like, are they really just using tariffs as this blunt instrument, this one-size-fits-all solution for every problem they see?
Right. But it's also important to remember, and the MSNBC analysis does acknowledge this, that there are some American manufacturers who actually see these tariffs as a good thing, especially in industries like steel and aluminum. They feel like it's helping them compete, against all these lower-priced imports.
Yeah.
And there's definitely some support for tariffs within labor unions, too.
But the criticism is that like the overall approach, it's just not very strategic, right? It's not really clear how all these tariffs are actually going to revitalize American manufacturing in a sustainable way. And then you've got the tariffs on agricultural products, hitting farmers right before planting season. That's going to be causing a lot of stress, a lot of uncertainty. And the MSNBC report, they talked to a lot of farmers in places like Iowa and Wisconsin, and they're really feeling the pressure.
Yeah, it definitely seems like there are some unintended consequences here. And the point that's being made is that tariffs, they can be an effective tool, but only if they're targeted, if they're part of a clear strategy. And that has to include things like clear communication and negotiation with other countries. So the criticism is that the current approach is just too broad, too scattershot. And the fact that Canada and Mexico have been able to present this like really unified response to the tariffs, that kind of highlights the contrast.
Okay, so here's another interesting angle from the MSNBC analysis. They're suggesting that maybe this whole sell-off thing isn't just about tariffs. Maybe some investors, they were already feeling like the market was overvalued, especially after that big rally after the election. So maybe they're just using the tariff news as an excuse to cash out, to take their profits and run.
Yeah, that's a really good point. I mean, there was definitely this expectation that President Trump's policies were going to be good for the stock market. So maybe what we're seeing now is like a reality check, as the potential downsides of the tariffs start to become clearer. And, the MSNBC analysis, they also talk about how there doesn't seem to be a lot of like consistent economic advice coming from within the administration, at least compared to the previous one.
Right, right, right. And in the end, I think the biggest problem is just the uncertainty of it all. Like, nobody really knows what's going to happen with these tariffs. Nobody knows what they're going to target, when they're going to hit, why they're even being implemented in the first place. It's just a big mess. And it's kind of ironic because, I mean, remember, the current trade agreement with Canada and Mexico, that was actually negotiated by President Trump. So it's like, what's the point of all this?
Right. Like, it's also confusing. So just to sum up, we're seeing these pretty big drops in the markets, both here and globally. And it's all being driven by this fear of the tariffs and all the economic uncertainty that comes with them. And this is having a real impact on different sectors, different industries, investor behavior. It's a global thing. And even though there might be some domestic industries that actually benefit from all this, there's a lot of worry about the overall strategy or the lack of a strategy.
Yeah. Exactly. So, given all that, all this volatility, all these mixed messages, it's really a tough time to make predictions. But here's a question for you guys listening, something to think about. In the face of all this uncertainty, all this craziness, what do you think is the most important factor that's going to shape the economy in the coming months? Is it going to be the direct impact of the tariffs? Is it going to be all the anxiety that businesses and investors are feeling? Or is it going to be something else entirely, some other force, domestic or international, that's kind of lurking in the background? It's a complicated situation, that's for sure. And we hope this deep dive has at least helped you understand the key players and the key forces that are at work here. So thanks for listening. We'll be back next time to unpack another big story.